Oh man, so Fantom up 2.73%, Bitcoin up 3.7%, nearing critical levels on both these charts. We're going to cover off the key levels and see how are they reacting to the news that we're officially in a recession. Yes, in case you missed the video from earlier, we are officially in a recession with the US allowing for 0.9% decline in GDP. That's the second negative consecutively here quarter in GDP, and that means a technical definition of a recession. Now, of course, some of the politicians out there are trying to play around with the definitions, but as far as we're concerned, that's two negatives, minus 1.6 and minus 0.9. We are in a paper recession. I'm going to come on to what that could mean shortly. We're seeing Fantom here up 2.64%, forming a nice pattern here in the charts. If I show you the key levels, you can see here, we managed to create a nice bottom here. If I show you that from my other chart, you will see that was right at the bottom of our broadening rising wedge, right? Look exactly at where it bounced, around the 36 cents as expected. We're getting our run up now. And the key for Fantom is, can it go post a higher high? And a higher high is going to be anything above 36, 37 cents. Now, I believe that will happen if and when Bitcoin can do the same. Bitcoin needs to go and post its higher high. I said I will turn short-term bullish in terms of a relief rally if we can get a daily candle close above 24,000. That doesn't mean a wick. I want to see a daily candle close above 24,000, hold the close above 24,000, and I want to see the next candle open up above 24,000 on tomorrow's daily candle as well. That is what I need to see to be able to take a potential long position. I will be doing so on BYBIT and BitGET, links in the description. So do get yourself set up with those bonuses. You can take that trade for free using those bonuses. Now, once we get that short term, I can turn bullish. Now, if we don't and we get rejected from here, we're going to come back into this channel, and that's what's getting worrying. Now, medium to long term, where do I sit with this? Well, I tweeted out earlier that I think equity markets probably have another 5 to 10% left to shred now that we've entered this paper recession. And that's leading me to think if equities are going to fall another 5 to 10%, and we know we've got a huge correlation with Bitcoin, maybe, just maybe Bitcoin could come down to get one more wick down in some of these low levels, maybe below 20,000 again, and maybe even test that 17,600 again before then trying to decide on, okay, have we finally bottomed out? I do not believe that suddenly we're going to get this massive run up back to all-time highs. Some people will lead you to believe that, but I'm going to let the data lead me. And what the data is going to lead me to do is this following. I'm keeping things very simple. If we get a close above 24, I'm happy to say we're in play between 24,000 to about 30. And the reason I say 30 is if I bring out a new chart and I turn it to weekly candles and bring out the EMA ribbon, you will see that this is where we're at, right? Let me just get this tidy. We are... Come on, play. There you go. So as you can see, we are here. So what I'm saying is if we can break through 24, which is your daily EMA close, and flip bullish on our daily EMA, great. Now we can start working our way up in a relief rally. I think that can take you maximum up to 30,000. So that's the maximum scope I'm playing in terms of a long. And even then, I'm not super convinced on it. But if we get the break from a technical perspective, I think it's a good risk to reward trade. In terms of long-term portfolio, I'm not going to do anything. I won't add any more if we go on this relief rally because I'm not going to chase those green candles. I'll just trade it. Okay. Now, the other scenario, and the reason I say 30 is you're going to get that rejection from this EMA ribbon. There's a lot of downward pressure. And we cannot say that suddenly we've changed control from the bears to the bulls. The bears are still in control. And you can easily have a situation like this. I don't want you guys to suddenly start getting emotionally FOMO'd in. We can easily get a situation like that back down. So it's not a case that if we run up to 28, 29, well, that's it. We're going back to 69, guys. Everything's hunky-dory. No, that's not how things are. We're in a paper recession, and things could technically get a little bit worse. Now, the only saving grace I can think of right now is when Jerome Powell and the politicians are saying this time is different, right? We've got this labor market. And I, to an extent, agree. The labor market is the saving grace right now of this recession. And that's why I'm calling it a paper recession right now, because I've lived through a recession. This is not a full recession, right? This is not people on the streets unemployed. Wages are still going up. People are still spending on luxury goods. Therefore, we're not in that real recession. So that's what's also scary, but also a saving grace. So the saving grace is that if it doesn't come into fruition and we just end up in a paper recession, and by the next quarter we're out of it, then great, right? We just had this little bit of recession. Nobody really felt it. And that is what the angle is that Biden and Jerome Powell are trying to take, right? Can we quickly get it back positive next quarter? And then technically we weren't in a recession. Nobody was laid off and labor market is really strong. Now, the down scenario is if we get another negative quarter next quarter and we're in a real recession and the labor market really starts to tighten and really starts to struggle, then you're going to see another layer of falling in the equity markets and Bitcoin as well. So that is something to watch out for over the next period of time. Now, important to note, we had MasterCard who beat earnings. I want to share some sound bites in particular from MasterCard because I think you can find this very interesting from their CEO. Domestic volumes continue to show strong growth with notable strength in airlines, lodging, and restaurant spend. He also said cross-border travel in Q2 has now reached 118% of 2019 levels. Cross-border card X travel continued to hold up well. Okay, notwithstanding the strength in consumer spending, we will continue to watch the environment closely, including fiscal and monetary policy. In other words, he's saying people are still spending. And he also says we've seen the shift in spend towards gas and groceries from discretionary categories like home furnishings. That's interesting. That corroborates what Walmart said earlier in the week. He also said affluent spend continues to be very healthy and carries on in a very nice way. Outside of the US, we're not seeing much in the nature of a shift between the affluent category spending versus the lower income. He also said, despite this, unemployment rates remain low, wages are rising, and consumer saving levels remain high. With this backdrop, consumer spending and particularly travel-related spending remains strong. Okay, so this is what makes things very, very interesting and so hard to predict as an investor, as a trader. You definitely have this technical paper of recession on the one side, but we're right in that the labor market is still healthy. People still have savings and they're still spending, and part of that is to do with the COVID effect, and people are coming out now and enjoying their lives and traveling and getting on flights and going to restaurants and just living a little bit more. But how long can that last? If things continue to tighten, if the labor market actually starts to tighten now over the next quarter, will we actually then plummet ourselves into a real recession, which is where you have the negative growth we're seeing here in terms of GDP, but also the unemployment really starting to weigh down as well? So loads to look out for. We've also got a few sets of earnings coming later today. Don't miss these. You want to see Apple, Amazon, Roku, and Intel after the close. We need to listen out carefully for those and how they can move the markets. And then we come on to the fact of, okay, what is going on? I mean, fear and greed is sitting at 32. That makes sense because Bitcoin looks like it's shrugging off this recession, right? It feels like, oh, look, we're just sitting at 24,000. But the reality is this is going to set in. And it's going to set in probably about early next week. Because what's going to happen is we've had crazy set of data this week. Huge companies. Don't forget Google. We had Microsoft missing, Google missing. You had Facebook missing earnings. You've still got the ones to come today, Apple and Amazon. You had your interest rate hike of 75 basis points. You've had the GDP figure. Tomorrow you get PCE inflation, which is the one the Fed uses. Loads of information right now, and the market is a little bit confused and volatile right now. So once they take all this information away, once the long-term investors and institutions take time to digest this, I think we'll start to see portfolios start to rearrange themselves early next week as people start to say, okay, what direction are we going to head into now over this next period of time? And why do I say that? Because the next FOMC meeting is not until September the 21st. That is a huge gap. That is 2 months or about 7 to 8 weeks of a period where the market can decide on a direction. And if the market decides to just shrug this off and be bullish for 6-7 weeks, we could see that Bitcoin move up to 30,000, right? And I want to be positioned in to take advantage of that from a trading perspective. Now, vice versa, if the market decides, nah, this is not good, Jerome Powell's being soft with us, he's not really doing what he should be doing, and we're now officially in a recession, and we see all these bad projections from companies and earnings, and they ignore what MasterCard and Visa are saying, and they take the negative connotation, then we could be channeling along this kind of 24,000, maybe even dropping below 20,000 level here on crypto. So definitely lots to play for. More of this is going to emerge over the next few periods of time, and we'll definitely keep an eye on that. Coming back here, I also want to show you the dollar index chart, which I shared with you guys earlier, and it's really important to keep an eye on this. If the dollar index chart starts to show some strength again, we could see a difficult time for crypto, okay? Because remember, the dollar index was cooling off in this period here, and that's what's allowed crypto to have its rally this week. But if dollar index comes out with vengeance next week and says, nope, we've collected some support from our EMA ribbon, we're going to go do this now, then that could lead to a bad week for crypto next week. So we do need to keep a close eye on that. What are our key levels on Fantom, just to make sure we are clear for those of us holding Fantom? And again, if you guys want to buy Fantom, you can do so using any of the links in the description, including BYBIT, BitGet, or OKX, all three platforms I use. OKX is a really great exchange and something I'm going to be using a lot more because they've got this new dollar cost average feature, which I'm definitely going to be using for my long-term portfolio. So if you're a long-term investor and you're holding your positions and looking to find a clever way of DCAing, stay tuned because I'm going to give you a lot more strategies using the DCA feature on OKX, because you can actually set up a pie of investments, and we're going to do a bunch of those together in this community. So As you can see here, Fantom is getting that bounce. We're trying to close above our EMA ribbon literally as we speak. And that daily close here for Fantom, anywhere at around 34, 35 cents would be a nice sign. And thereafter, like I said, you just need to create that higher high, 36, 37, in order for this move to go ahead. That's going to happen if Bitcoin gets above 24, right? If Bitcoin can explode above 24, Fantom will obviously play out its bullish situation as well. One more thing worthy of notice is you're seeing altcoins not move as fast as Bitcoin, bar Ethereum. Now, Ethereum is the theme right now, right? Given the merge, but we're seeing Bitcoin dominance continue to climb here today, slightly green here today on Bitcoin dominance, and that is because you're going to see that move happen with Bitcoin first, then rotate across into maybe Ethereum and some of the larger cap alts before moving across to some of the lower cap alts as well. So we'll continue to keep an eye on dominance in this volatile market. So there you have it, guys. Hope you enjoyed this quick update on Fantom and the broader market. Lots to play for. Let the data lead you. Do not be emotional. That is a key right now. Anybody who's taking sides and trying to label themselves as a bull or a bear, like, they're not good investors. A good investor detaches themselves from emotions and labels, and they trade or invest the data they see in front of them. If they see a relief rally taking them up to 30, they can take advantage of that. But they also know, okay, the bears are still in control long term here. I'm not going to get carried away with myself because it could just be a bull trap. Hope you guys enjoyed this update. Don't forget to smash up the like button and subscribe. Check out the links in the description to BYBIT and BitGet to collect your trading bonuses. Thanks for watching, guys. Go watch this video, and I'll see you in the next one.